Bank of England widely tipped to raise interest rates in 5 minutes' time. Welcome to IGTV for IG clients as we count you down to the decision at high noon today. This is IG Television, here to help you trade the Bank of England announcement and the markets following the release. The expectation is that we will see an interest rate rise of 25 basis points, taking us away from 0.5 to 0.75. Recently, we've seen some evidence that there is some sort of a supporting economic data release signal that this is almost certainly going to happen today. Certainly the futures markets, or the if you look at interest rate futures, pricing in this at a rate of 90%. So it's almost a certain done deal. The big question is whether or not the UK economy can sustain this, especially through those Brexit negotiations, the negotiations which peak in October this year. The next time the Bank of England could move on interest rates is the 1st of November, which is when the next set of data release comes through. We've got the, in addition to the minutes, the spread of the voting today, and also the announcement itself, we also have the quarterly inflation report release as well, where we get an indication from the Bank of England with their fan charts as to how they see inflation and growth as well developing. Now, this morning, my colleague Victoria Scholar caught up with Paul Sedgwick, Chief Investment Officer of Frank Investments, who gave his take on why the central bank is likely to raise rates today.
So overall, maybe they're thinking that they can take this point in time to raise interest rates. The economy is strong enough as it is. The global economy is also doing reasonably well, and therefore they gives themselves a little bit of ammunition further down the line, depending on how the Brexit negotiations go.
Well, before we get to our guests here in the studio, I just want to quickly run through a couple of charts I think is worth looking at as we go into this announcement at midday. Weakness across, in fact, across the globe on the equity markets. This is the FTSE 250 index, and you can see here the indecision candle yesterday, but today we got this Marubozu candle indicating that the bears are fully in control of trade as we see this market down 20,594. A little bit of support below where we are at 20,473. I just want to update you as well on what's happening with the FTSE 100. Similar sort of price action here, some big declines today, and today significantly taking us past the support at 75.91, currently trading 75.55. That's the equity markets. A quick update on where we are in terms of sterling trade. This is sterling against the US dollar. We're just approaching support at 130.48, currently trading at 130.77. So that's where things are at the moment. Karim Chadid joins us now from BlackRock with his assessment of things. Got a couple of minutes to go. Karim, welcome. Thanks indeed for joining us. Your thoughts on today's interest rate meeting?
So, I mean, it's interesting to see how the sterling is actually under pressure when the bank is really widely tipped to raise rates today. The market's been pricing it in for quite some time, so that's why likely it's not leading to much appreciation in the sterling. So we're looking at a 91% probability based on the gilt futures of a rate hike today, so very much in the price. But when you look further out the curve and looking at the gilt curve, and also at how the sterling is trading, which is fairly under pressure, there's a sense from investors that it could probably be a one and done. So let's get this out of the way. Let's get to 75 basis points, which is the highest rate since 09. But then let's have this in as sort of a cushion, so that if things don't go as planned in terms of Brexit negotiations or the economy, we've got some ammunition. Yeah,
the spread as well of voting today is going to be interesting. I've heard it said that if this is a balanced vote, if it's 4-4, and then the Bank of England governor has to come in with his deciding vote, it's the first time the Bank of England governor has had to do that since June 2007. So could be significant. Yes. But I think you're going for a more direct vote, aren't you?
Yeah, more decisive. I think I would be quite surprised if we see. I mean, it would be interesting to see that, but I would be quite surprised if we see that. We're probably thinking more decisive vote in favor of a rate hike. Having said that, we do have a change in MPC seats coming up in September with McCarthy leaving, and so that sort of change with Haskell coming in could be net a bit more dovish going forward.
Yeah, I think you're going for 8-1. Is that right?
Yes.
Okay. Okay, well, it'll be interesting to see what happens there. But certainly John Cunliffe recently, the Deputy Governor, suggesting, a couple of 3 weeks ago, suggesting that perhaps maybe it's not necessarily a done deal today to see interest rates up. But of course, a little bit of water has flowed under the bridge since then. We are waiting that decision just in a couple of moments' time. This, as we have it at the moment, is sterling against the US dollar. I just want to bring in a minute-by-minute chart. You get a better idea as to what's happening as we await that decision. We are expecting an interest rate rise of 25 basis points, and that is exactly what we've got. It has gone up from 0.5 to 0.75. We haven't yet got the spread of the numbers, people. Right, here it is. It is coming through with the vote hike of 9-0. So that's the way I read this. Yeah, it's 9-0 for an interest rate spread. So all 9 members of the committee going. This is very decisive, and you can see the way in which sterling is behaving as a result of this. I should go back to the daily chart, because I think that when you're looking at the single-day candle, you can see, in fact, hasn't much done to disturb the way in which the markets are moving on the daily candle. This is an hour-by-hour candle. This is the midday hour, so you can see the way in which it's punching higher at the moment with an interest rate rise. But I think it's the decisiveness as much as anything, which has certainly surprised me. And I'll get back to Karim in just a couple of minutes' time, who was going for something like 8-1. But with all 9 members voting to raise interest rates, this really does give a little bit more credibility to the Bank of England, because we had been hearing from an increasing number of rate rising. More rate hikes will be needed, according to the statement that we've seen. We've got the next interest rate meeting that's expected to see any move in interest rates. Could be November, depending on the outcome of those Brexit negotiations in October. Let's go to the IG trading floor and join my colleague Michael Going, who's with us, who's been looking at some of the flows as a result of this. Mike, 9-0 vote. It's taken me by surprise. It's certainly taken our guest here in the set by surprise, because of the decisiveness of this outcome. What are we seeing in terms of flows across the IG client platform?
Yeah, well, it massively picked up the moment basically the figure came out. The expectation, I think, was 702 or something like that, and then we've just seen, instantly the orders going through and being triggered by that huge movement quickly, just coming out the back of K when it's still above where we were at the opening of that candle. So you can see now that many more orders getting filled again and people getting in. The volume massively picked up there naturally, where people jumped on the back of it, because it is a surprisingly sort of, bullish voting on there, so they're seeing quite a bit. Obviously, everyone in favour, which wasn't expected. As you said, you were discussing there that it could be sort of a deciding vote on Carney's part. So it is going to be interesting to see moving forward, especially as with the Brexit negotiations coming to a head, and he's even stated himself it takes up about 50% of his time on that.
Sure. Okay. All right, Mike, we'll leave it there. Thanks indeed for joining us. Mike Going there from the trading floor. I just want to go back to some of these charts. This is the FTSE 100. This is a minute-by-minute chart to give it an indication of the drop that we've seen, which is not really a surprise. But since then, we've seen the markets eating back into the losses. This is a 1 minute-by-minute chart. This is sterling now, and all of the benefit, pretty much all of the benefit, has now been pulled back. This is an hour-by-hour chart. Let's get back to our guest, Karim Jadid from BlackRock. So 9-0, even more decisive than you were saying.
Yes. I mean, we were thinking it would be decisive, but this is quite a surprise that it's even unanimous. Having said that, I mean, it is. I think the investor perception of a dovish hike could stand to be true. Dovish hike, I call it, because you see this initial hawkish reaction with the sterling going up. Let's remember the FTSE 100 tends to be quite negatively correlated with the sterling because of its international sales revenue. So sterling goes up, FTSE 100 goes a little bit down, and then they're reversing that move very quickly. It feels like an initial hawkish reaction, and then digesting that, and then focusing on the future rate path, which is very much still uncertain.
Well, one of the statements that's come through with this is that we should expect more rate rises to come. Now, we know that the November 1st meeting is the next time we're going to be seeing the next quarterly inflation report. Do you see that now as very much a live meeting? Or do you think they'll wait a little bit longer?
I think it's too early to tell, because what I think is likely is that it remains very data dependent. So far, inflation has settled at about 2.4%, which is above the Bank of England target, which is probably a driver behind the thinking of a rate hike. But at the same time, growth is a little bit of a mix. For example, we publish our in-house GPS indicator on UK growth, and that looks a little bit below consensus, meaning that our forward-looking expectation on UK growth is a little bit on the negative side. So there's some room for disappointment, and that's something that probably would still hold them back. So it's a bit of a balance and still very much dependent on the data and on the Brexit negotiations.
One other thing, of course, is something that I know that some commentators are concerning themselves about, is the amount of debt that not just us as consumers have, but also corporates. And if you're pushing rates up, this is going to cause a real problem for where to allocate limited resources. And on household balance sheets, for example, you see mortgages go up. That takes a large chunk out of some people's disposable income, if indeed they've got any disposable income at the moment at least. So surely out of this, ultimately, it will see lower growth numbers. It'll see lower retail sales numbers. It'll see lower footfall in retailers. I mean, all these things, presumably, the Bank of England is going to have to concern itself about the further up it pushes rates.
Yes, and I think on that point, to add to what you just said on leverage, which I think is a very good thing to be looking at, the UK, since the sterling drop that we saw in 2016 around the Brexit vote, when you look at consumer trends remained fairly firm. However, that was accompanied with a pickup in household leverage. So in addition to the corporate leverage that you talk about, household leverage has gone up, and that's something to bear in mind as we think about the future rate path.
Yeah. Okay. Let's just quickly go back to take a look at what's happening now with these charts as we've been witnessing this move up in sterling. 131.12 now we have at the moment. Just want to go back to the longer term charts and get a better idea as to what's happening in charting the markets this morning. I was talking about this this channel that I had drawn here, and we've got a 1.25 standard deviation away from the mean here in this channel that I've drawn, and you can see the way in which we continue to be magnetized towards the center of this. Today's candle is showing us bouncing off that at the moment, but we're still very much in this channel. Karim, just want to bring you back in on this, on the sterling dollar rate, 131.14. The Federal Reserve, as expected last night, left things on hold. There is certainly the expectation that we'll see more interest rate rises from the Fed, possibly two this year. What dynamic is going on here for sterling against the US dollar? We've got the Bank of England now beginning to raise interest rates, and they're warning of more rate rises to come. And the Federal Reserve doesn't seem to be taking its foot off the gas pedal just at the moment.
I think on the US side of things, yes, the FOMC meeting was unchanged, but one takeaway from the statement is I think they used the word strong in reference to the economy 3 times in the first paragraph. So it's very clear that there's still, and we had the GDP number from the US last week, which was at 4.1%, quite a strong number. There's very much still a focus, even if yesterday was a non-event, a focus on further hikes from the Fed, not putting their foot off the gas pedal. Having said that, the dollar has stalled a little bit over the past few weeks, not necessarily just versus the sterling, but more broadly the dollar basket, and also whereas for the sterling, I think again, just as it's important to look at it for the BOE rate path, for the sterling itself, the data and the path of Brexit negotiations will be important. They have been a source of volatility for the sterling so far, and they'll continue to be so. So as we approach October, I wouldn't be surprised if we see a bit more volatility in the sterling, given that that's the next sort of soft deadline between the EU and the UK.
Are you focused just on sterling against the US dollar, or should we be looking at against the euro because of obviously the direct connection that these negotiations have between the two parties?
I would imagine that versus the euro, it could even be more volatile, given that the negotiation parties are impacting both sides of the cross, whereas with the dollar there are some other factors that are independent of this topic that are driving it. But yeah, both are interesting to look at. Yeah.
Before we let you go, just one last look beyond the Bank of England. It's non-farm payrolls tomorrow in the States. What are your thoughts on that, and how should, as traders, how should we approach this in terms of an interest rate picture which is seeing rates go up?
So looking at it, it would matter most for the future Fed meetings, right? So yesterday was a non-event, but it's very much both the market as well as the Fed, based on their statement, are pointing towards a continued rate hike path. September and December probably are live meetings, so to speak. So those are the next signposts. The NFP is mostly to be looked at in that lens. We have seen 2.7% wage growth last month. The expectation is for the same this month. It's more of a, if it's in line, then we've got enough to keep going. And another date I would point to after the NFP tomorrow is August 22, which is the Fed minutes release, to get a bit more details about their policy from the meeting yesterday, the details on the policy expectations.
Yeah. So the risk tomorrow is, what do you see? 190,000 jobs, I think, is the consensus. Mm-hmm. What do you see as the risk for tomorrow's jobs number? I
think given the state of the US economy after the latest GDP reading, we've seen a lot of we've seen quite decent inflation numbers, wage numbers. I think perhaps a strong surprise on the upside might create a bit of downward pressure for U.S. treasuries, and then so that's on one hand, on one side a tail risk, a very strong number, and on the other hand a big miss. But I think the latter is a little bit less likely.
Yep. Okay, all right, thanks indeed for joining us. Karim Jadid from BlackRock, helping us through this announcement today. As expected, they raised interest rates. Unexpectedly, they did it 9-0, which means that it's, in the words of our guest this morning, very decisive. And in fact, I think it's caught a lot of people on the surprise side. The markets that have seen moves, we've seen a little bit of a pullback for the FTSE 100, but that's now pretty much negated. And the slight strength we've seen for sterling has been held on to, but it's only a fractional gain when all is said and done. Of course, we still have at the back of our minds where to go next, and a big meeting, the big next bit of data comes out at 1:30 p.m. tomorrow with that non-farm payroll release. That's it for this update on the markets and covering the Bank of England interest rate decision, 25 basis points to 0.75%.